Hi fellow traders, I'm making this video to share my USD JPY quick trading plan with you. So I've already taken the sell position when market went right below this candle's low. So let's understand price action in terms of candle pattern. Number one is this small candle pattern. So you can see that the market earlier was moving up and then this made some sort of spinning top, which was a pause in the market, which was saying that the market, bullish pause exhausted and it is about to take a pause. What happens after pause? Continuation to the upside or reversal to the downside. So when this second candle started as some sort of engulfing bearish candle, which did not just engulf previous candle, it engulfed all these previous three candles, which gave me enough confidence to take the sell position right after this crossed below the low of this candle. Okay, so I didn't wait for the closing of the candle, unlike I do most of the times in conservative way of entry. And let me tell you why I didn't wait for closing and why I was a little more sure about the bearish bias. If we look at Friday, there were three significant events. One was non-farm payroll release, along with unemployment rate and average hourly earning. Average hourly earning increased significantly, whereas non-farm payroll slightly disappointed by two things. One was less than the forecast release, and another thing was negative revision in the previous. Collectively, these two phenomena were negative in case of NFP. However, the total difference was not significant. So this was the one factor why we saw bullish as well as bearish move during the release of non-farm payroll. You can look at this candle. The reason behind this is they were contradicting each other. Hourly earning was positive, NFP was negative, revision in NFP was negative, and many traders in the world believe that the interest rate cut expectation has already been fully priced in, which is why they were not bearish, rather they were bullish because of the hourly earning, which is why there was bullish spike as well as the bearish spike. So these were the conflicting things, and eventually at the end of the day, what we observed that the USD JPY closed to the downside, even below, almost below the point where it started moving from during the release of non-farm payroll. So entire day was bearish, and it means that the two FOMC members signaled the interest rate cut. They almost made it sure that they are going to at least get 25 basis points in September. One member clearly said that the time has come. So it was still overall bearish news, and market still reacted bearish despite the most other institutional traders who already believe that it has been priced in. But what we see today, that markets again recover to the upside. So now there is a clash between bulls and bears. Bulls are coming in for the retracement because they believe that the interest rate cut expectation has been priced in, and then bears are coming back because there is sure probability of interest rate cut. And in such kind of economic conflicting scenario, what we should do is to look at the final setup on the chart. So final setup on the chart is still bearish. If I zoom out, I can see that the market after retracement couldn't break below this spike swing, this upswing high made by the bullish spike on a Friday. It's still, it almost went there. However, there was still a difference of 293 points, or you can say 29.3 pips, and then it reversed to the downside. It means that the bears are still back in the market and they are capable enough to sending it back to the previous low. And this was the previous low made by this swing low, this swing low, this swing low, and this swing low. So this is the support area. So if you want to set a TP, you can set a TP on the upper border of this rectangle, this greenish rectangle, or what we can do is we can wait for market to come here, and then we can see the price action. If we see any sort of candle pattern which suggests that market is pausing or the bears are exhausted, maybe spinning top, maybe any hammer, maybe any dozy, anything. You know the candle patterns. I'm not teaching candle pattern in this video, but what I'm saying that this is where we will try to exit in profit. What I see on the relative strength index, that it is turning to the downside. It's gonna go below 50, and it's gonna happen if this candle will close as the bearish candle. And now look at the candle size. If it will close at least 70% of this size, it will still send the RSI below the 50. So this is slightly aggressive entry because of trend has remained bearish after the fight between the bulls and bears. And who wins the battle is something we will see on Wednesday when CPI will be released. I think CPI is scheduled to be released on Wednesday, but until Wednesday, there can be such kind of smaller trading opportunities where we can take advantage of smaller swings. Now let's talk about the exit plan in case of loss. What happens if USD JPY starts going to the upside right after this candle? Then we need to wait for any candle to close above the previous high. So this was the previous swing high, and from here our risk to the upside is 78.5 pips, but you do not know where exactly will it close. It may close 10 pips above, so roughly you can say 88.5 pips or 90 pips is our risk, and reward will be something around 118.5. But what I am keeping is I'm taking only equal reward, 89.2, something around 90 pips, because I want to exit this position as soon as possible, because I already said this is a small swing trading opportunity, but you can target for even 117 pips upper border of the rectangle. So that's all in this video. Thank you for watching.